A dividend is a portion of a company's earnings paid out to its shareholders. Let's look at how they work for your portfolio. Simply put, when a profitable company has extra cash, they may choose to distribute some of that money directly to you. Most companies pay dividends on a quarterly schedule. This provides a steady, recurring income stream for investors who hold the stock. Companies pay dividends to signal they are financially stable and to reward shareholders for their long-term ownership of the business. Dividends are different from capital gains, which occur when you sell a stock for more than you paid for it. Many established companies aim to increase their dividends annually, which can help your passive income grow even if you don't add more shares. It is important to remember that dividends are never guaranteed. A company's board of directors decides if and when to pay them. Thanks for watching. Research company history before investing and always consider your own financial goals. See you in the next video.